So what a week, 2 weeks it has been for Tesla. I mean, Paul texted me a couple of days ago and he goes, Tesla is at almost $550 a share. After being at $700 a share, was it? Let's take a look at their 52 week. So if we're looking at Tesla just on March 8th, 3 days ago, this was at $563 a share. Today, it's basically, let's call it $700 a share. That's where it closed. This is crazy. But that's a great thing if we're traders because we can go and figure this out. Let's talk a little bit more about Tesla before we get into the charts. They have this story came out this morning. They have increased the pricing of their Model Y long range and the Model S Plaid, which the Model S Plaid, actually, let's just look. The Plaid is 114,000. So this must have been 115,000. So this must have been 104,000 before the price increase because these prices are reflecting on their website already. The price of its Model 3 standard range has been increased to 37490 from 36990, and that's about a little under 1.5% increase. Same thing with the Model 3 long range. Interesting though, they've kept the price of the Model Y the same, which I'm surprised about because that's their kind of new entry. That's their newest model that's out there. But hey, they're all great cars. I do want to see their pricing. Model S is the most interesting to me, and so right now it's 75,000. Call it if you keep everything the same. And this is their new interior. They have finally done a revamp of interior. I don't really like the steering wheel, but that's besides the point. The biggest complaint that I always had about Tesla was that if you bought a car in 2013, I think that was when they really got their Model S going on the road. If you had a 2013 versus a 2020 model, the interior was virtually exactly the same. And they were updating the software of the 2013s to almost the same capability, as long as the hardware allowed it, to be at the same car as a 2020. So it really wasn't giving anybody the incentive to go ahead and upgrade to a new Tesla in their same model. But they did some they did some updates, mostly on the interior. The exterior you can kind of see is the same thing, and this is just interesting to me. So this might be boring to you. I want to see if they have that interior part. Nah, they don't. So I guess on their interior, now they have two areas that you can put your smartphone and charge it in the front. In the back, kind of in the middle underneath the center console in the front, there's a screen on there, and you're going to be able to use your phone as a controller and kind of play video games on that screen. So it's pretty neat. When it comes to technology and innovation, Tesla is the place to go. When it comes to making money, Tesla is not the place to go. Curious to see their PE, and then we will check out this chart. Their PE is 1,093. Nice. All right, so let's look at Tesla from a long-term perspective, then we'll do the day-to-day, and then we'll do the intraday and day traded, of course. So let's see what we got here with Tesla. The interesting thing about them is that they are for sure short now. And guys, if you have been watching me for any length of time, I always say do not short Tesla. It's very enticing to do it. Personally, I don't trade Tesla. I traded Tesla back in 2018. I bought it at 165. I sold it at 265, and I've never owned it since. And that was a swing trade that I did. So I think I owned it for like maybe 5 days at the most. So to me, I just don't like trading Tesla because you can go from $560 a share to $700 in one day. And this is your snapback. So I've said it in the last couple of videos. I said it on the live stream today. You're coming down through the sweet spot. You're kind of getting into this oversold area. Now, this is what separates the good traders from the bad traders, is when you get snapbacks in price like this. For Tesla, the snapback is extreme. I mean, that is an extreme swing. So if you were short on this, let's say you were short, let's say you added to your short right here. That would have been a good add. You add again here. You snap back in price, create a little bit of an M, and then you pull down and you get a great short position on it. Now, you're going to create, remember, we want M formations when we're shorting. We want lower highs, lower high, lower high. What we would want here is it to stop here and come down like this, so you're creating that lower high. This side of the M is lower than this side of the M. That's ideally what we would want. Granted, it swung from $560 to $700. So the reason I don't like it is because it makes me a little bit uneasy. But all this is, the last 4 days, is a snapback. This is a snapback channel. You still have a downtrend. And if you are a good trader, you are trusting your trend. You are trusting this area right here. Granted, we are moving a little bit sideways and maybe starting to roll over like that, but this is what separates good traders from the bad traders. They will exit their short position right now because there's a big snapback channel going on saying, oh my God, I got to get out of this. Got to get out because the price is moving on me. But if you listen to me and you ignore price and you just focus on your trend, you will more likely than not, more times than not, make money. With Tesla, I don't know, and this is why I don't trade Tesla. But technically, we are short. It is creating an M formation, so it's creating a higher low, a lower high, and we're just creating these M's, so M like that, and hopefully this does pull back down like this and create a new low where you can add to your short and maybe get another one like that. But we'll see. There's heavy support going on. The reason that we're hanging around right here and consolidating right here is because we're right at this 100-day moving average, this turquoise line. That's what is, that's a big thing for hedge funds. This is where hedge funds make or break stocks. They put money into stocks or they take money out of stocks at that level. That's where they decide what they're going to do. So that's what we're doing right now with Tesla. Of course, everything that's going on with tech and the NASDAQ and inflation and treasury notes and everything, that is something big that's happening. So I'm going to go over how I would swing trade this. I don't recommend swing trading Tesla, but that's on you. I'll give you the tools to do it. So you're pretty decent volume coming in. You're coming up through the sweet spot pretty nicely. You are right. The thing I don't like, you're right on that 100-day moving average, and you're right in between all four moving averages. So your price, I mean, this is tough. Even if you pump up here into the 780 region, you have a 50-day and 25-day moving average pushing down on you, which is going to probably, more likely than not, if you get up there, it's going to cause some kind of downward direction like this on you. Now, the good news you have going for you is if you drop down to this 200-day moving average, you have a very strong support level here at 480, 500 bucks that would push the stock up on you unless something happens like March or April of 2020 where things start to fall apart. That is that's what happened, and I'm curious to see what they did back in that time. They were at 172, and of course they split in this area. So 172, they dropped to 71, let's say. So they dropped about 100 bucks a share, $110 a share, something like that. But remember, this was after the split. I mean, so this pricing, I mean, we were at I think we were over $1,000 a share at some point. So I digress. Let's get back to the daily. So if you want to do something here, you can go long on it if you would like, but what you need is a green engulfing candlestick like that pushes up on you. But you're going to run into resistance right here at the 50-day moving average. So I don't know. This is so tough for me to say swing trade this. I'm sorry, this is a 25-day moving average. So this is tough for me to say go and swing trade this. I would just avoid it from that perspective. So let's go to a day trade. This is probably where you can make most of your money. Let me zoom, get a few more days here so we can just see what we got going. So a couple days ago, what day was this? Wednesday? No, Tuesday. This would have been this is when you got a huge run. I think this thing was up like 15% this day or something. So this is where you could have made a lot of money. You were above 80% all day. Remember, you have to be between 80 and 100 to go long. Let me redraw that circle. You were between 80 and 100 pretty much all day. You could have just added here, added here, added here. Anytime you get a big engulfing candlestick, you're adding. Right when your stochastic line drops below 80, which it did over here at around 2 o'clock, you had some sell-off right in these two candles. You had selling volume coming in. You broke under 80, sell it, take your profits. So you would have made, what are we at here? 670. This could have been your first ad. Call it 605. I mean, $65 a share in a couple hours, pretty damn good. So that would have been a good one. Now let's go over to today and see what we did. Yeah, we didn't really do much. I mean, the stock price was up 5%, but for some crazy reason, 5% on Tesla is not a big move on a day trade. So if you can actually see, not once was it confidently over 80% all day to do some kind of day trade, to go long. Barely in the morning was it under, but you want to be consistently under. Now, of course, hindsight is 20/20, but that wouldn't have looked as good. So to short it, you got to be under 20. To go long on it, you got to be over 80. And we were neither of those today. So today was kind of a wash on a day trading side. This is exactly what you want to look for when you're going long on something. Even if you want to go short on Tesla on a day-to-day basis, you could do it in this area, but man, it just pops up on you some. Guys, if you're going to do something on Tesla, make sure it's on a day like this where you're confidently you're over 80% and you can go long on it, or go confident where you're under 20% and you can go short on it. Don't be don't let Tesla stock be wishy-washy that day. If you're going to trade it, do something where it's dominating, where it's going up 15 to 20%. And trust me, that can happen. It's not out of the ordinary. And we just saw that on Tuesday. So that's Tesla for you. Roundabout, go over this one more time. And what I want to say, just be very careful with this. I'm being very upfront. I do not trade Tesla. I will not trade Tesla. If Tesla ever settles down, maybe I'll do something with it, but I'm not going to. Right now, it's a short on a long-term chart. If you want to short it, let it get below this 560 area. Create this M formation that I've drawn a couple times now, and go ahead and short it. On a day-to-day, I wouldn't do anything with it. You're just bouncing around between moving averages, and you're stuck right at your 100-day moving average. So again, I wouldn't do anything there. From a day trading perspective, make sure you get a dominant day to the upside or the downside. Make sure you're moving up like 10% or 15%. Don't have a day when you're moving, I can't believe I'm saying this. Don't have a day when you're moving up only 5%, and because the price doesn't really fluctuate that much from a candlestick, 15-minute candlestick perspective. So that's Tesla. If you guys like it, go join my Mo's Muscle Patreon. It's a middle tier, $55 right now. You get full access to me. I make videos all day. I share all my trades with you. Right now I'm in Cardinal Health, and I told the guys in the Discord right when I made that trade, and some of them made it along with me. So if you guys like this and it resonates with you, join my chat and join my Patreon level, and you guys have a great day. Good luck trading, and be careful with Tesla. See ya.